Hello and welcome to the Shirley Douglas Show. If you saw the title, you know that we have someone on the show that you're very familiar with, and she's here to scare you again about taxes. And the show is called The Tax Lady is Back. And I should have put those exclamation points. So we'd like to welcome Miss Michele Alexander.
Well, thank you, Miss Shirley Douglas, but I promise I won't scare you too badly.
Yeah, you'll be afraid. It's all right. It's scare you straight.
Yeah, that's a good way to put it. That's a good way to put it.
And one of the things that she had just shared with me are the new things that's coming down the pike. You know, we always like to know what the new things are. But due to time, I think we're going to delve right into it. I always ask her, you know, kind of go back on to the things that she covered last, but you know, let's start.
Which today I think is relevant because they're, you know, IRS. Well, this is just the beginning of February, and they are already backed up. Okay, early on in January, IRS began accepting e-filed returns on January 17th, indicating that anyone who filed on that date should receive a refund within 4 to 7 days. Not happening.
Not happening.
Not happening.
So what's the average time now?
21 days.
21 days? That's how far back they are?
That's 3 weeks.
And so you know what that's going to do? That's going to trigger those people into getting the biggest scam in the United States of America.
Exactly, and that's
the loan.
That's no, there's no more of that. That's
what is it?
Part of the reason why they're taking time to do a tighter review, even of electronically filed returns, to things that may raise a red flag. Or, for example, if you've been filing taxes for 10, 12 years, and all of a sudden now you want to claim 5 or 6 kids to try to get the earned income credit, which we know a lot of people do that, unfortunately. There is a lot of fraud. There is a ring, as a matter of fact, of people in the United States, and I got this information about 3 weeks ago, where there's a group of folks, this is nationwide, who has created a very elaborate scheme to dupe you out of your tax refund. Excuse me. So IRS is being extra cautious, and I know that everybody wants their refund quickly. However, you're better off allowing this process to protect you as opposed to getting something back quickly.
Well,
okay?
How, I guess you're going to get into that is, how can we protect ourselves from that? What is going on that the flags that we should look out for to say this is a scam?
Don't allow anyone to prepare your tax return who does not have a PTIN number.
Okay.
That's a preparer tax ID number.
Okay.
So even if you walk into the H&R Blocks and the Jackson Hewitts and all the other tax services, or even coming to my office to get your tax return prepared, you should ask for credentials. You should say, are you registered with IRS? If they're preparing your tax return and they're going to transmit it electronically, they still should ask you to sign a number of documents, including your actual tax return. And there is a space on the front of the 1040 that preparer can put their PTIN number. So if something is going wrong with your tax refund, however, your tax return as it is submitted, it goes back to that person. So if no one signs, if you don't have that information, you don't know who did this. You could be out your refund.
Well, how might someone know that PTIN number is particular to that person? How would one know that?
Because the number is registered with IRS. It's an IRS number that is assigned
to us. No, I understand that. But right. I, as a tax
you can say
customer,
to me, do you have a PTIN number? Okay. And they'll say, yes, I do. And they should put it on your tax return. It's written on the tax return.
No, I thoroughly understand what you're saying. You're not
you want to know.
I want to know, is it a genuine number?
Oh, well, we do get a letter. We get a letter that says you've been assigned a PTIN number by
Okay.
IRS.
So
mine is hanging on my wall.
Okay.
Okay.
So that's what a customer should look for.
That's what a customer should look for.
They should look for the actual letter, not just because they wrote it on a piece of paper.
That's true. That's true. Good one, Shirley.
I work sometimes.
Very
Wow,
little.
yeah, because man, that's scary.
Yeah, that is scary. I do encourage everyone to file early. File early because they're going through, like I said, there's a process to try to eliminate as much fraud activity as possible. So it's taking a longer time to get your refund. Whatever you do, file. You are penalized for not filing. So even if you owe and have a tax liability, you'll pay a much larger fine for not filing than you will if you file an owe. Okay? So you don't want the penalty, the failure to file penalty, to take your liability from this to this, because it will. It will. It will just shoot up and you won't know what's going on.
You know, I'm jumping in here because, I talked to her. And so I'm probably going to take this out of order.
Okay.
Because I think that you had mentioned, and if I'm wrong, she'll tell me, where it was more advantageous for a couple who were not together to file jointly.
That is correct. That is correct.
And that still stands?
That absolutely still stands.
Okay.
So that if there's a couple out there who, for whatever reason, are separated, going through divorce, thinking about going through divorce, you're not divorced yet, file a joint return. IRS gives you the opportunity to have your refund split. Percentage goes in his bank account, the rest goes into her bank account, and so forth. And the two people don't even have to be in the room, in the same office, when the tax return is being prepared. If one, I have couples like that. New referrals. I had a guy in my building, as a matter of fact, who said, my wife and I are not together, but I convinced her to let us file a joint return, because when he first approached me, he asked me, what could he do? And I said, talk to her. I said, because listen, if you file a married filing separate, which is the worst category filing status category you can use, it's going to kill you. It's going to eat you up. And so he convinced her to file the joint return, because I said, she can take, if it's an $8,000 refund and 2/3 of it should go to her, we can put 2/3 of that $8,000 in her bank account, and the balance to you.
What is it that you can say that would make one or the other more comfortable in even doing that? Is there something that you can say to assure them that will actually happen? Because maybe they can't come together because they can't even be in the same room together.
They don't have to be in
exactly, but what can you say to assure them that what they want, what is said to be done, is in agreement, and that it will actually take place?
Well, we would, in that situation, I would take each person individually. So that I have the information, I prepare the tax return, I take the husband first, or the wife, and then the wife, and then the husband, it doesn't matter. But nothing gets filed until both parties have reviewed the document, agreed, and I have signatures, and then I move forward to file. So that can be done.
So it's not that quick of a process if you've got to see both of them.
It's not that quick of a process unless we do it in the same day.
Yeah,
we could do that. We could do it in the same day.
Or they could come in together.
Or they could come in together.
Which would solve a whole lot of problems.
Absolutely. For the sake of not having to face a liability, it's worth it to face each other to get this refund.
That's right.
Don't get the liability.
Or even if they don't have to face each other, that's the biggest part, I think, needs to be communicated, that you don't even have to look this person in the face. But you can reap the benefits of filing jointly.
Absolutely. Absolutely. And there is
and
a
trusting
great benefit.
That Michele is going to make sure that your percentage of the money goes into your account, and the husband's
goes into his
account.
That's correct.
And so they sign something that says this percentage goes here, and
well, I show them the paperwork, the documents, and so forth, and they can see, because all the information goes on to IRS forms.
Right.
So they'll be able to see what's going on. Right. Okay.
All right.
Yeah.
All right.
Okay. Okay. Any other questions, Miss Shirley?
No, I thought that was.
That's good.
That's
okay.
That's a really good one. And we might even want to just go back over that just in case someone missed it.
Okay.
Because I think that is a good point.
Okay. Married, filing separate. Okay. All right. One of the things that people don't do traditionally, even folks that I've been doing taxes for years and years and years, still do the exact same thing. Everybody does this. They get their W-2 in the mail, and they say, "Oh, I got my W-2," and they do like this, and they run to my office. They've never, a week later or 2 weeks later, they're still in the envelope. They've never opened the W-2. Okay, they bring it to me. I open the W-2 and I look at it. It's completely off balance. The income that they made doesn't reflect the withholding. The withholding doesn't reflect the income. The Social Security number is off by 1 digit, 2 digits, or 3 digits. And all of this could have been straightened out if you had just opened the envelope and looked at your W-2. So I encourage you, please, 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 when you get your 1099 or your W-2 in the mail, open it and look at it and look and see, wow, I made $48,700 last year. And then look over to the withholding box, which should reflect at least 10% of that 48,000, which would be 4,800. And all you see is, wow, I only paid $400 in taxes. Problem. Problem. Okay. So you need to, that says that you haven't been looking at your pay stubs. You haven't checked your pay stubs. Okay. A successful filer always prepares the year in advance. Look at the information that is coming to you in a paycheck, okay? Because your paycheck itemizes all of the withholdings that's coming out of your money. And if week after week or every 2 weeks or once a month, you're getting money and no money is coming out, there's an issue here.
Yeah.
There's a problem. Also make sure that the withholding is going to the right, or is being applied to your Social Security number, okay? Because with the wrong number, it's going nowhere, or it's going to someone else, okay?
Okay.
And this is, all of these things can be corrected, but it takes time, and it will slow down the filing process. So I just did one Saturday. Young man came in, had not looked at his W-2. And he had 2 W-2s. I pulled his files from last year, and I always, if that's the first thing I always do, because that's the most common mistake, is to check the Social Security number. The Social Security number on one W-2 was correct. I looked at the other W-2, and it was 2 digits wrong, not just 1 digit, and it wasn't like transposed numbers. It was like his, let's say, for example, the last 2 digits on his was 66. On this, it was like 22. Okay.
Or 23.
Or 23, right.
Yeah,
just
even
way
worse.
off, okay? So that means that who has his withholding? I don't even have the correct information now. So absolutely I can't e-file it. All I can do is walk it in, sit with a revenue agent and explain, you know, I have this paper file information, but it's probably, there's going to be an adjustment because we have the wrong information. So I don't know whether the money that he made was attributed to somebody else and then sent to him, or did he make somebody else's money and is, you know, it's all mixed up. In addition, on the same particular client, his Pennsylvania state withholding, he has his W-2s that say Pennsylvania, the PA ID number, the amount he made, the tax taken out. And on another W-2, it says CT, that means Connecticut. And I said, did you work in Connecticut this year? He said, no, I've been right here in Pennsylvania all year. I'm like, okay, so why are they sending money to Connecticut? So obviously they've transposed this person. So you have to pay
Now,
attention.
who are they?
The people he worked for, the employer. The employer, whoever is responsible for your payroll, preparing your W-2 or your 1099, though you have to always look at your information to make sure that through the year that it's accurate, because there are so many, and I'm seeing a lot more mistakes, and this is only February.
Wow.
And I've seen like tons of them already.
And so someone coming in with those kind of issues, that could delay them from getting
Absolutely.
their taxes filed at all.
Exactly. Well, no, IRS will say file, because you will be penalized if you don't file. So you have to file, and this year you have until April 17th to file or request an extension, and that extension will take you to October 17th. I think it's the 17th. Of this year, okay? So, but IRS will say, well, even with all the mistakes, file, and then once we get the mistakes, or, you know, you get everything corrected, then you can file an amended return. Issue with that, and I mean, I do amended returns all of the time. They cost. We don't do them for free.
Right.
So we try to make sure that the information is
In
accurate
place,
and in place, so that you don't have to be penalized. To be penalized, and you don't have to come out of pocket with additional cost.
Right,
you know, this is income tax filing should be a once a year occurrence, not once now and then again in 3 months and again 2 or 3 months down the road, because you know you've got all of this incorrect information flying around.
You know, it's so unfair that if an employer does that, there's no consequence for them.
It's a mistake.
If just cause you all that trouble.
But you are the person accountable for your paycheck, for the information, for making sure that the information is correct, because you are the taxpayer.
Yeah, it's
and
your
even
onus.
it's on you. So because everybody makes mistakes. Now, you know, I'm not perfect. You know, if I make a mistake on someone's tax return, then that mistake is raised to me, I make that correction at no cost to the taxpayer. I can happily say that has not happened, but it's because I go through such painstaking processing to make sure that things are accurate. But again, it could happen, and even when I'm preparing a tax return, if I transpose a number or I add a zero, making it $1,500 instead of $150, when I finish the tax return, I review it with you, and we go through every figure so that you can say, "Oh, wait, Michelle, that's too much money. I didn't buy $1,500 worth of clothes. I only bought $150 worth of clothes, you know, or something like that." Right? Yeah. So.
Okay.
Okay.
Yes, ma'am.
Okay.
That one wasn't too scary.
I told you I wasn't going to scare anybody.
You scare us straight. It's all
Scare you
good.
straight. Okay. All right. So, tips for recently married or divorced taxpayers. And we talked about as far as the refund was concerned. However, there are those of you out there that are going to be divorced and going to be married. All right. This is February. Let's say you're getting, it doesn't really matter what month or day in 2012. The one thing that you don't want to do is change your withholding. Even if you change your name, which you should if you're going to be married, you can, if you change your name at work on your driver's license and your employment status, so your W-2 looks like it's going to say now Jane Smith instead of Jane Jones. Make sure that you change your name on your Social Security card as well, because it has to match. Okay, it has to be a match. Doesn't mean that you have to change your withholding. Most people think when they get married, they run to their accounting office and say, I'm married, and you know, and they start changing things. Don't do that, because you don't know what your financial life looks like yet. You just got married, okay? So keep everything single and zero. Go through the first filing season and then decide how it should be. At that point, that next January, you can make that determination, okay? Or you can say, well, I want to change it to married, but withhold at the single rate. You could do that, but don't start.
That's just a wiser way to go.
Right, it is a much wiser way to go rather than start changing things, especially if you have not gotten any counsel about what to do. So the first thing you should really always do is consult with someone, okay, about what to do. People don't think about taxes until January. They don't think about it, but you start thinking about taxes so that the following year you're in place and everything is. We
should start thinking about it April the 16th.
Absolutely.
For the following year.
Absolutely. 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 Okay. Last year and the year before, we had the first-time home buyers credit. Okay. Do you recall what that was? How if you bought a home within a particular period of time, you got a credit, and a tax credit, and so forth. Well, now you have to pay that credit back.
Oh, I told
so now
you she's
it gets scary. Okay.
I knew something was coming down the pike. Because you always do that.
Right.
At least you didn't wait until the end of the show.
No, I didn't wait.
Now say that again.
If you have if you were a first-time home buyer and used the first-time home buyer credit, it is now time to repay the credit.
Well, did they know that they had to pay it back?
That's my next statement. If you went to a tax professional who gave you the first-time home buyer credit and didn't tell you everything about the credit,
you're in big trouble.
Well, it's not that they're in big trouble, but a lot of people, you don't get something for nothing. Yeah. You just don't. So
you told us. We learned that because of that stimulus check.
Exactly. You don't get it for nothing. It came off of your refund. It reduced your refund. But everybody was like, "Oh yeah, the government's giving us money." Really? Seriously? No.
Doesn't happen.
Doesn't happen. So this is a very complicated, or I should say, it's a complex tax matter. Now, IRS does have a tool on its website at www.irs.gov. Gov, G-O-V. Don't put in irs.com because you will get a website, but it's not IRS, okay? irs.gov, gov. And they have an instrument there on their website that helps you to calculate what your repayment obligation is and how much time you have to pay it and so forth. It's complex. It's a complex matter. I think it's okay to go in and take a look around, but I would absolutely recommend that you consult with someone and not try to figure it all out for yourself. Okay? So that's
and consult with who's the someone?
Who's
tax professional?
Yes, or a CPA. If a CPA does your taxes, or you can call my office. I guess that's okay to say.
Yeah.
Okay.
And you know what? Just give them the number so that if there are any questions.
My number is area code 412-224-4022. 224-4022.
And if they have any questions, they can feel free to.
They can feel free to give us a call. We'll be happy to have them come in, take a look at their information, consult with them, make a recommendation as to how to proceed. Okay. And there is no blanket answer for everyone. Everybody is treated as an individual because everybody's situation is different. Okay. All right. Theft crackdown. I think we started talking about that. Did I talk about theft crackdown? How fraud. How IRS is trying to make sure that your refunds are safe. So they're taking a little more time for processing to make sure. It's just like, when you sign up for something, how they say, type these words in this box, and it's all like distorted, and you have to figure out, is that an
Right.
H or an R,
Yeah.
and so forth. So they want to make sure that you're not a robot or another computer just picking up things and so
Right,
forth, because
right.
that's how fraud starts, identity theft and so forth. So they're taking a little extra time to make sure that it doesn't happen to the average taxpayer. There were, so far this year, there have been 939 criminal charges that include 69 indictments related to identity theft and refund fraud.
Just in taxes alone.
Yes, in 23 states.
Ooh.
Yes, so I think and it's just February.
Wow.
It's just February. And IRS only started receiving filed returns on January 17th, and today is February 6th. So
this information just got out and...
Right.
It's amazing.
It is amazing. Okay. And I don't know how much time we have. Are we okay?
Yeah, keep moving.
Okay.
That's
All right. There is something new this year. It's called the 1099K. Okay. You're familiar with 1099s. 1099s are referred to as information returns, because if you work as an independent contractor, and I know everybody understands what that term means, then the person gives you a 1099. It just shows a blanket amount of money that you earned, so it doesn't remove any tax money, which means that you, the taxpayer, are responsible for the taxes on the amount of money that you earn. Mm-hmm. Well, the 1099 is all called the information return, and the employer, or the person that gave you, the taxpayer, the 1099, has to file that 1099 with IRS. That's why 2-3 years after you've gotten that 1099, you get the letter from IRS, because you haven't included it on your tax return. You thought it was, a lot of people do. They think it's free money, but nothing is free.
Right.
Nothing is free. So we have a new 1099 this year called the 1099K. It is also an information return, and it's for reporting electronic financial transactions so that voluntary tax compliance is in order. In other words, when you file your 1040, you're only required to give IRS your W-2. IRS does not require you to send them your 1099, okay? Your 1099, if you get one, goes to Social Security. And Social Security does what they need to do with it for your records, so that they know what Social Security payments you should be making according to this pot of money that you've earned. So IRS doesn't know. You can put on your Schedule C, if you're a 1099 person, then you're filing a Schedule C for profit or loss from a business or a profession. And that form is where you identify where your 1099 income is. Well, you could put anything on there, and IRS would never know. So they've cracked that down on that. So now the information return now says, here's the amount of money I paid Shirley Douglas in 2011 on a 1099. So if you don't report that amount of money, okay, to IRS, you know, as an employer, we reported to Social Security, but now we're going to report it to IRS on a 1099K.
Well, why wouldn't that have been happening years ago?
Cheryl, it's all about progress. It's just all about,
oh my goodness,
it's all about progress. It's like, it's just, we've come through the period, the dark ages, we've come through the Stone Age, the Ice Age, and now we're in the